Welcome to Home Biz Tax Talk. My name is Lysandra Everett, and I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune in my show, you're going to hear about topics that are important to the home business community. And today, I want to talk about third-party reporting requirements that come back to bite you. All right? So, as of this recording, every day this week, I have gotten a call from someone who has gotten this letter from the IRS requesting either more money or more information. And what I mean is that they have underreported their income. The reason they've underreported their income is because of the third-party reporting requirements that people seem to really not understand. So I am going to go through several of them so that you understand exactly what is happening on the IRS end, so you cannot continually make these mistakes. And the reason I put mistakes in quotes right now is because some people really do believe that they're going to shirk the IRS by not reporting this income, and that could not be further from the truth. So I want to definitely educate my community on what is the third-party reporting requirements, the most common ones, and then that is going to help you make better decisions going forward about reporting your income. All right, number one is a 1099 miscellaneous. Most home business owners, if you are an online marketer, affiliate marketer, if you have a network marketing company, if you earn more than $600, you will be getting a 1099 in the mail. And what that 1099 is, $600 or more. That 1099 that comes to you also goes to the IRS, all right? It's sitting there waiting for you. They have computer matching that this form has been filed, and so they're waiting for a match. They don't automatically get to the match because there are still other filing requirements, okay? But it's sitting there waiting for you. So if you get any kind of tax form in the mail, please file it with your taxes, okay? Because 9 times out of 10, it's got a spot. All right, 1099 miscellaneous. If you earn $600 or more for services, not for goods, for services, okay? So that's number one. Number two is the 1099K, all right? The 1099K comes from places like PayPal, Amazon, Stripe, third-party payment processors. And the requirements there is 200 transactions and $20,000 in transactions. So if you meet both of those, you will be getting a 1099K in the mail. Now, understand, when they report the 1099K, they report your gross sales. They don't report what their fees are. So you might have sold $50,000 worth of stuff on Amazon. That's what Amazon is going to report. They're not going to report their Amazon fees, their transaction fees, their selling fees, any packing and all that fees. They don't report that. They just report your gross amount of sales. So the 1099K, again, is a computer match. It's sitting there waiting for you. All right. So you have, once you meet both, but it's both of those, 1099K, 200 transactions, and $20,000 in transactions gets reported to the IRS, all right? A 1099C. A 1099C is a debt cancellation, okay? That gets reported to the IRS if you have a debt canceled of $600 or more. When you get a debt cancellation, that amount that was canceled is counted as income, okay? So if you have a $5,000 credit card debt that was settled for maybe, $100, then you're going to get a 1099C for $4,900, and that's going to be counted towards your income, all right? That increase in income can also knock you out of eligibility for other tax credits, okay? So you really got to understand, it's not just you get this 1099C and that's the end of it. No, it affects your income, which is going to affect your ability to qualify for certain tax credits or just tax credits, okay? So that's the 1099C. All right, The other thing I want to talk about is something called structuring. All right. If you have a cash transaction of $10,000 or more, you're required to report that to the IRS. All right. So if you walk into a car dealership and you drop 20 grand on the table to buy a new car, that information gets sent to the IRS. If you go to the bank with 15 grand in cash and you deposit that into the bank has to report that to the IRS. It's a part of the Bank Secrecy Act. Now, what people try to do is people try to get slick and deposit less than $10,000. Okay, that is illegal. It's called structuring, and because it's an attempt to evade. It's an attempt to evade the Bank Secrecy Act. That is illegal. Most recently in the news is a little Mikey something or other from the Jersey Shore. If you watch that show, guess what? Mikey and his brother about to get sent up the river. And this was one of the charges because they were dealing in cash and depositing less than $10,000 in different banks so that they could evade the reporting, the Bank Secrecy Act, right? And guess what? They got busted. All right. So you have to fill out a form 8300. Is what gets sent to the IRS. Okay. And so how do they know if you're operating in cash? How does the IRS know? Okay. It's a thing called a credit report. Okay. So here's the deal. If you're maintaining that you don't have any money, right? But you really having cash, you're trying to operate in cash under the table, that kind of thing. The IRS pulls your credit report and goes, oh, they got a car. Hadn't missed any car payments. Hadn't missed any mortgage payments. No credit card payments are late. None of that's late. Everything is on time. You live in, but you're maintaining that you have no money. So if you have no money, how is it that all of your bills are paid on time, hadn't missed anything? Something not right, okay? And so that's when the investigation begins, okay? Yes, they will follow you and watch what you do. That's just what they do, right? That's what they do. So when you're dealing in cash over $10,000, that gets reported to the IRS, okay? And the other thing is if you if you try to get slick again and try to do 2 transactions within a 24-hour period, like 2 separate transactions, okay, I'm going to deposit $9,000 here and then leave the door and come back in and deposit $9,000. If you have 2 transactions within a 24-hour period that equal $10,000 or more, that gets reported to the IRS as well. Okay. So the next one is foreign income reporting. Okay. Paul Manafort is the most recent one that I've heard of that, yep, baby, you are in trouble. Because what happens is that as a U.S. citizen, and I say this all the time, if you are a U.S. citizen, you are required to report any income you earn on this planet. Okay. So if you go to Ecuador, if you go to Russia, you go to China, you go to the South Pole, if you make money, you are supposed to report it, okay? But what happens is that people try to stash their money in these foreign banks thinking that the IRS will never know. Now, although these countries on TV might not be getting along, on the finance end, on the business end of the countries, they're reporting, okay? They report directly to one another when they have citizens in their countries with a certain amount of money in their banks, okay? So if I've got $10,000 sitting in a bank in, Saskatchewan, right? If I've got over $10,000 sitting there and I don't report it, well, guess what? Canada is already reporting. So at last I checked, there's about 115 countries that participate in this kind of direct reporting, because they're looking for the people who are trying to dodge taxes. Okay, so yeah, like I said, they might be fighting on the TV, but on the business end, everybody's cooperating just fine. Okay, like serious business. All right, so so what happens here? Listen, when you don't report this stuff yourself, and then the IRS comes for you, it's because it's something that is illegal, right? Underreporting your income is illegal. And, thinking that you can just have people pay you on PayPal or have people just pay you in cash, if you think that that's going to, keep you from getting busted, dude, no. It might not happen today. It might not happen next year. It might not happen the year after, but it will happen. And see, normally especially when it comes down to underreporting income, if you filed your taxes and then you haven't reported your income, then you're going to find out sooner rather than later, okay? Because the IRS is, okay, you filed your taxes, but you didn't report this. And so you're going to get, if it's over 20% of your income that you should have reported, you're going to get an underreporting penalty as well. Not cute. So yeah, you just need to report it and just be prepared to pay your taxes, guys. Now, if you have not filed, then it will take longer, okay? Because you have up to 3 years to file to claim a refund. So you might not hear anything from the IRS for 3 years. You're sitting up there thinking everything is hunky-dory. I've gotten away with it. But in reality, the IRS is really waiting for that 3-year statute to pass. Because if you don't file for your refund in that 3 years, if you're due a refund, then that money goes to the Treasury. But if you have a tax liability, there is no such thing as 3 years. Okay? If you have a tax liability and you haven't filed, there's no statute of limitations. There is no statute of limitations on failure to file. This is why you always need to file your taxes. So in the event that you do owe, you at least got your taxes filed. All right. And then they go back to the date that the tax was due. So if your tax was due, April 15th of 2015, then after April 15th of 2018 and you haven't filed, they're coming for you if you owe. And if you've got a 1099 sitting, any one of these 1099, K, C, miscellaneous, if any of that is sitting at the IRS, then as far as they're concerned, you owe, because there's no taxes taken out of that. None. Okay, so yeah, those are the third party, the most common ones that will really come back to haunt you and haunt you bad, because the IRS, the penalties and interest, the interest compounds daily. Okay, it's compounding and they do it daily. And that math adds up really, really quickly. And if that number is over $10,000 that you owe the IRS, they have the right to place a lien on your stuff. That means that they got first rights to your house, your bank account, all of that, over $10,000. That's why that number is important. That's why you see the commercials like, if you owe the IRS $10,000 or more, please contact us immediately and maybe we can help you. Yeah, because the IRS can come take your stuff at $10,000. All right. But as always, if you get a letter from the IRS, make sure you don't ignore it. Just be in contact with them, get help, reach out to get help from an enrolled agent like myself, a CPA or a tax attorney, whatever. Get help. Don't do it on your own. Okay, you can, but you can also get help. Okay, so that's it, you guys. Thank you guys so much for tuning in to today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get questions answered about your home business taxes. All right, have a great day, and I'll see y'all next time. Bye.